but they're the largest producers, they're the largest importers, and I said it's a bunch of nonsense. If the commercial banks that work by proxy for the PBOC are buying gold from the refiners in South Africa and Switzerland, I don't think they're telling the IMF how much they bought. If on behalf of the PBOC, if they are buying gold that's not 995 pure or 995 pure or less, they're not telling the IMF how much they're buying. You had the head of the IMF come out and say that their numbers are fugazi, that they're not right, that they are understating it. You had the lead analyst for the Bank of Montreal say the same exact thing. And then there was just a report that came out that said because the bullion banks take care of the gold transport for the PBOC, shipments from London to Beijing are disclosed in UK customs data, and the customs data reveals that the PBOC continued to buy gold.
In today's news recap, silver bar premiums rise to highest level in 9 months. Premiums on gold and silver coins and bars have been on the low side ever since the panic over the 2023 bank failures calmed down. Retail investors have been selling back silver at higher than normal levels over the past year, which had left local coin shops burdened with excessive inventory. That helped to keep premiums low, although in the past 3 days, there's been a substantial change in silver premiums. Matt Riley of EF Bullion reports that wholesale premiums for generic bars have risen from 10 cents to 50 cents in the past few days. A level, he says, premiums haven't reached in at least 9 months. We also talked last week about how Matt has been seeing silver coins and bars melted down into investment bars that are being used to meet industrial demand, which makes it even more interesting to see the change in premiums. Later this week, we'll examine whether the bulk of the retail selling has already occurred. But the premium increase is worth taking note of, as we've seen several periods since 2020 where there's been a surge in demand that's driven premiums higher for extended periods of time. In some cases, significantly higher, such as when American Silver Eagles were trading as high as $18 over spot in 2022. Keep in mind that a shortage of a particular retail product is different from an outright shortage of physical silver needed to make those products. But with the election, the Fed's rate cuts, and the BRICS meeting still on deck this year, it certainly wouldn't be a surprise to see another surge in premium levels. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Okay, all of that being said, let's go back to Project mBridge. Who's behind Project mBridge besides those 4 countries? Oh, lo and behold, it's the BIS. And Saudi Arabia just became a full participant in Project mBridge. Let me say that one more time. Saudi Arabia, the largest producer of oil in the world, just became a full participant in Project mBridge, which is not compatible with US dollars that the BIS is behind. Now, think of the way the BIS did things in 2017, 18, and 19. And I know they said to these banks, we're going to reclassify it tier 1, get your gold. So if you look at all of these banks that I just mentioned, nearly 40 banks that have brought all of their gold home, and if you look at the massive amount of gold purchasing over the last couple of years by the central banks, BIS is at it again, I would have to think. Because if you read the white paper on the unit token that will trade on Project mBridge, it says something very interesting, and that is that the baskets that will be used to mint these tokens, that each country will mint, will be 60% BRICS plus currencies. And by the way, I did an interview with Vince Lancy not too long ago, and he thinks, and I think it's genius, that China, Russia, maybe India, they will do all they can to back their central bank digital currency with some form of gold backing so that it comprises the majority of the currencies within the basket. But anyways, it says that the baskets, 60% currency, of BRICS plus countries, 40% gold in kilo bars deliverable on demand, will be minted, pulled out of circulation, put into an escrow account. Here's the key: within the borders of the countries that possess said gold. They do not need to send their gold to a central authority like Beijing, like Moscow. No, every country will have their own baskets of these unit tokens that are put in escrow and audited independently, continuously, with very strict penalties for abandoning in any respect the protocol of the unit ecosystem. And so you have independent auditing, but the key is within their own borders. So with all of these countries buying gold and bringing it home, it just reeks of the BIS again, who is behind Project mBridge. And what it also says is that these countries will use their own central bank digital currencies. It's not a common currency. So if you look at all of the countries that make up 99% of GDP, every one of them has a CBDC in production or already working, operational. And so every one of these countries will be able to maintain their own monetary autonomy. They won't have to first convert to a dollar with the Western banks KYC and AML, anti-money laundering, know your client, very lengthy time lag, costly. Instead, they'll all have their own CBDCs and trade over Project mBridge with one another. And if it gets to the point where a country says, listen, I have enough digital yuan, or I have enough digital rupee or ruble, whatever, I want to, and you want to buy energy or a commodity, let's use the unit token. The unit token will be 40% gold in kilo bars, 60% BRICS plus currencies. The gold is deliverable if indeed you want. That's all over mBridge. And if they said they're going to come out, in principle, they've agreed to this. They're going to have a meeting in September in China to ratify it. If they roll it out in October, if they truly do, what does that say for the future of the dollar, which we don't need it anymore? Obviously, we can use our own CBDCs and trade with one another, free from the Western meddling and sanctioning and theft. And if we need to settle in something bigger, well, we can do the unit. And so that takes away all impetus to own U.S. treasuries. Instead, you stockpile gold because it has doubled the performance of the 10-year treasury. It's the only other tier one asset, and they can't frickin' steal it from you. So as far as I'm concerned, Andrew, if this happens, you can argue, I can argue that they've lit a fuse already on the dollar. We've lost the hegemony. That happened arguably a few weeks ago when Saudi Arabia said, yeah, we'll still take dollars, but we're going to take other currencies too. They didn't sign the exclusivity deal or re-sign it. Okay, so the hegemony is gone. The supremacy isn't. But what happens if all of a sudden the majority of human population now has no impetus to stockpile dollars, as they have for 50 years, creating a synthetic demand for the dollar, and have no impetus to stockpile treasuries, which was the other half of the petrodollar deal, where we reinvest all excess proceeds in treasuries, which have performed nowhere near as good as gold. And we have proven that if, you're on the wrong side of our ideological thinking, we're going to take your assets. And that, I think, is the whole reason you're seeing all of these countries not only accumulate tons of gold, bring it home. So it's twofold. It's the meddling and the suppression and the confiscation of assets, and it's the unit token. And if it is indeed ratified, to which the head of the BRICS and Development Bank said, yeah, in principle, we've agreed to it.
In today's news recap, Bank of America expects declining silver inventories to make the deficits count. The Silver Institute shows that the silver market has been in a deficit for the last 5 years. And during that time, we've seen substantial decreases in global inventories, which makes sense, as the metal has to come from somewhere to meet the shortfall. Yet, with no resolution to the gap in sight, as the deficits are widely expected to continue years into the future, a recent Bank of America report suggests that the declining inventories are starting to make the deficits count. Their report also commented on China's surging silver consumption, which has continued to grow in 2024 as their solar production has again exceeded expectations. And with governments calling for a tripling of green energy by 2030, the demand for silver is going to have to increase if the governments are going to get anywhere even close to meeting their targets. China has already shifted to being a net importer of silver. And we've personally talked with one of the larger silver producers who told us about how Chinese smelters have been going directly to Latin American silver producers and offering substantial substantially reduced treatment charges because they're able to take advantage of the increased premiums in China. Now, we'll show you more clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps.
That's what I try to do. Now, I don't know for sure that I'm right, but I'll take you down that road for the privilege of your listeners anyway. My line of thinking. And you're right, it starts with the BIS, who I think it does things in a way that just scream, really? What I mean by that, and to your point, was, in 2017, when the Bundesbank said, give us back our gold, we just give us back our gold already after 3 years of trying. What became interesting was the other banks within a few weeks that decided to do the same thing, repatriating their gold from the New York Fed, that being the Bank of Hungary, Turkey, Poland, Austria, the Czech National Bank, the Dutch National Bank. All of these banks said, give us back our gold, which was unusual in 2017 after 6 years of the market heading down. And the following year, in 2018, those same banks bought more gold as a group than they did in the previous 60 years combined. All right, now something's unusual. And I'm talking about it nonstop. In 2019, I start doing YouTubes, and those banks that bought more gold as a group than they did in the 60 years previously combined while repatriating all their gold from the New York Fed and the Bank of England, they doubled that amount in 2019. And then just somehow miraculously by coincidence, the BIS said, that's right, gold is the only other tier one asset. And that's really when I started to follow you very closely, because you might have been the only other one around that was talking about this. And it started to make sense to me, like, yeah, well, the BIS obviously, as the most powerful bank on the planet, told these central banks, listen, here's the plan. It's going to be reclassified tier one. You might want to bring it home. You might want to start buying it. Just became obvious to me. So we'll fast forward to where we are now. And I want you to keep in mind the BIS again and the way that they operate. So over the last couple of years, it's been well documented that the central banks have bought more gold than at any time in central bank history. And what's been unusual about the gold acquisition over the last several years, to me, is the repatriation. And just a simple Google search will show you that Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia, just a few weeks ago, Hungary, Belgium, Egypt, just a few weeks ago, Senegal, just a few weeks ago, Romania, Nigeria, just a few weeks ago, Poland, Ghana, just a few weeks ago, India, that's an interesting one, bought 1.5 times the amount of gold they bought all of last year within the first 4 months of this year. Last year being a record year for central bank buying, and they bought 1.5 times the amount they did all of last year in the first 4 months of this year and had it shipped home, along with 100 metric tons of gold that were held at the Bank of England since 1991. Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, just a few weeks ago, Czechoslovakia, and many others. That's just a simple Google search. But all of those central banks brought all of their gold home. Now, the conventional wisdom would be, look, the United States just stole $5 billion in assets from the Russian government. And I don't like the word sanction, because it's not sanction, it's default, and it's stealing. And when Janet Yellen can say to CNN, hey, listen, we're okay with Xi and Putin being friends and allies. And my initial thought is, well, geez, thank you so much, Madam Secretary. That's rather benevolent of you. But she says, if Putin or Xi gives 1 penny to the Putin war machine, we will sanction their banks, their companies, and Beijing itself. Never mind the fact that we've given $260 billion to the Ukraine with no congressional oversight, Stinger missiles and F-16 jets and the intelligence on where to drop it, because we're the world reserve currency. Doesn't matter what we do, it only matters what you do. And this is the rallying cry.
What do you think of Andy's take? Do you think gold and silver price manipulation will end up soon with prices soaring to record highs, or do you disagree with him? Post in the comments section your price prediction for silver by the end of the year, and share with the stackers your exit strategy or buying levels. Me personally, I'd be looking forward to unwind a significant portion of my silver at $50 and would be selling all my stack if we get past $100. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.